Hello friends, this is Raj Sastry from Raj Option Trading. Today is May 28, 2022. Hope you're all doing well. Today, let's take a look at Snap Inc. and do a deep dive on Snap. As you can see here, Snap is a camera company. They're also into augmented reality and virtual reality. Let's jump in and take a look. So today we'll take a look at Snap Inc. and see what they do, and then we'll look at the competitive landscape. As many of you know, a lot of social media stocks have come down a lot because of the Snap's guidance down. So let's take a look at the social media companies and see if we can buy them after this sell-off here. And let's look at Snap, look at the fundamental analysis and see if the numbers are good. And finally, let's also take a look at technical analysis and see if the stock is making a move from a technical perspective. Finally, we'll conclude giving a verdict. Is it a good buy here, or should we wait, or should we sell? All right, let's jump in. All right, from a leadership perspective, look, we got CEO Ivan Spiegel. Pretty young chap, as many of you know. He's got an 85% approval rating. That's a great approval ratings. CEO is doing something right, so employees are liking him. And look, we got co-founder and CEO Ivan Spiegel, and we got Robert Murphy. Looks like they got all the young generation leadership. That's always good. Robert Murphy is the Chief Technology Officer. All right, so Mr. Spiegel, he's a co-founder. He served as CEO since the company went public. And he co-founded this company right off of Stanford, which is a good one. So he's also one of the youngest billionaire back in 2015 at the age of 25. So it looks like Ivan Spiegel is doing something right. And as he saw the numbers and the market, I think it's the right to give a guidance to the Wall Street and general public just to let them know what he saw, which is okay. I think, most people should do it. Ivan Spiegel is doing it, and good for him. I think it's a good one. It takes courage to give warning way in advance. All right, now let's jump in here and see why Snap. Look, Snap has got 332 million daily active users. That's a great number. And over 6 billion AR lens plays. That's a great number. They're a big leader in the augmented reality. And they got over 250 million daily active users who engage in augmented reality. That's a great number. And as you can see here, they got a lot of creators and they made a lot of lenses. And also, look, this is a key statistic here. Over 75% of 13 to 34-year-olds, I think over 24 countries use Snapchat. So basically, the young generation, they love Snapchat. This can be a great one. As they grow older, they will keep using it, and the younger generation will keep using Snapchat also. So that's a great one here. The demographics really plays out to the strength of Snap. All right, now let's look at the significant opportunity to grow here. Look, they still have little lower penetration in North America, just 24% penetration, and North America has got 400 million smartphones. And look, Europe, they're barely there, just 15% penetration, and Europe has got great 560 million smartphones. They can expand in Europe, and rest of the world, there is 2.5 billion smartphones here. The penetration is very less, and also monetization is also less in the rest of the world. Look, the point here is they got significant opportunity to grow here. I think they can take advantage and grow, especially in US and Europe, where monetization is high, and then they can make a play for rest of the world and grow there also. All right, now let's jump in here and look at Snap and what they do. Look, Snap is a camera company, and they also have the stories, communication, and also the augmented reality. And stock price is $15. and market cap is $25 billion. Look, they're down big time from year to date perspective, and also they're big time down from a 52-week high. That's a huge drop here. Look at this drop here, huge big drop as you can see here, and a nice huge drop here. At this time, look, analysts are still saying strong buy. That's a good one here. So looks like analysts have confidence in this company here. I think that's a good one here. 25 say buy and 5 say hold. And look at this big news on May 24th here. Social media stocks sink to erase $135 billion on Snap warning. Snap gave warning saying their revenue will be a little bit lower, and they also gave a lower guidance. So that's why stock came tumbling down. It takes courage for a company to give warning like this upfront. I think this company is doing the right thing by giving the warning. So with that, let's jump in here and look at price target. From a price target perspective, look, stock price is right now $15 and lower target is $14. I think there is not too much downside risk here. The higher target is 44 and mid target is 35. So even the mid target is more than double the current stock price. That's a conservative target here. And look, technical perspective it is sell here, and fundamental perspective analysts are saying buy. I'm with these analysts here. I've been buying some Snap as it drops off here. It can bounce back pretty nicely from these levels here. Downside risk is low at these levels here. All right, now let's jump in and look at competitive landscape. Look, Snap is in multiple countries as you can see here, and they got nice penetration when it comes to 13 to 24-year-old population. That's a great number here. The younger generation, they use Snap. That's good here. And also 13 to 34-year-olds, they also use Snap. Looks like it's a company who can effectively penetrate into the young generation. That's always good. All right, now from a competitive landscape perspective, we got few companies have sorted this by market cap. As you can see here, the top dog is Google. Everybody knows Google or Alphabet. Look, nice company here, and their overall score is 90. That's a great overall score here, and they're doing very well. Valuation perspective, they're growing in all cylinders. Quality is also good. Quality means things like gross margin, net margin, and even profitability. And look, sentiment perspective, it's right now social media stocks are in a low sentiment. From a sentiment perspective, it's low because of warning from Snap. And next is we got Facebook or Meta. It's a great stock. Look at the overall score. Its overall score is 90, just like Google. This is a great one to buy at these levels here. Completely beaten down. Look at the RSI here. Both the Google as well as Facebook, they're down big time. And then you got Twitter. Twitter is really trying to please or trying to cope up with Elon Musk and his whims and fancies at these levels here. Stock is down as you can see here, trying to go higher. Many of these stocks are trying to go higher in 1 day and 5 day and low RSI. This one has got high PE ratio. At these levels, you could buy, Twitter also on the down days. And we got Snap here. Snap is a good one to buy here. Completely sold off here. Look at that RSI. RSI 31 tells you it's completely sold off here. Stock has managed to bounce back on Friday. I think it's a good one to buy at these levels here. I think it will bounce back from these levels here, and company can do well. We look at some of the deep dive and the numbers and see if there is an improvement from a fundamental perspective. And then we got a few more here. Look, keep watching the RSI here. I like the ones with lower RSI. We got one right here, Pinterest. A lot of people love watching Pinterest and do some projects at home. So I think it's a great one to buy at these levels. And Pinterest, look, it's got positive net margin, unlike Snap, which has got negative net margin. And then you got a few more here. Etsy. Etsy was doing great during the pandemic, but now it's coming down as you can see here. Still nice overall score of 50 here. Now the stock is slowly bouncing back. That's a good one here. Even up here, Etsy's RSI is pretty low, 44. And then you got Bumble went up, and even Sprinkler went up, as you can see here, a little bit higher RSI. I would not be looking at higher RSI names at this time here. Yelp, it could be okay. It's middle of the road here, and it's just 50 RSI. And I love Sprout. Sprout is a good stock here. You could buy it up here also. This used to be Wall Street darling a while ago, but now look, stock is trying to go higher in the short term. If this gets pulls back, you could buy some Sprout. It's a great social media company. All right, now let's look at some of the industry rating here. We got a few industry rating when it comes to Altman Z-score, Piotrowski F-score, and finance, growth, and profitability from Morningstar, as you can see here. Look, we got Snap right here. And Snap, it's not doing great from a profitability perspective, but it's growing nicely. Growth perspective, grade A, as you can see here, along with Pinterest, also grade A, and IAC, also grade A, as you can see here. And look, from a Piotrowski F-score perspective, Snapchat right here, it's got a Piotrowski F-score of 6. That tells you it's a good company. The books are improving and financials are improving. That's one of the reasons I like to buy this company at these levels here. And look at Pinterest. I love this company also. It has got even higher Piotrowski F-score. Tells you the books are improving here also. I would be a buyer there too. All right, now let's jump in here and look at the snapshot of Snap Inc. From a snapshot perspective, look, it's got a little bit higher debt to equity, but current ratio is high. They can easily meet short-term financial obligations. RSI 31 tells the stock is completely sold off here. And analysts are recommending buy, and they make around $727,000 per employee. That's a good number here. All right, so from a performance perspective, look, stock is completely sold off here, all the way 1 day, 5 day, all the way to 1 year. And look, this company has not made money for investors after this huge big drop. That's when we can come in and buy. From a analyst perspective, from a growth perspective, look, their sales growth is pretty good here. 5 year 53%, 1 year 56%, quarter over quarter also great here. And from a next year sales growth is great, and next year EPS growth also great. I think they might have lowered it slightly, but it's overall it's good, as you can see here. And as you see here, net margin negative. One of the reason Wall Street does not like this company yet. And nice working capital. Look at their working capital, $5.2 billion. And they got some debt, as you can see here. And they're not paying too much interest, just 0.80% interest. Not too big at all. And look, they have free cash flow. It's a positive free cash flow, which is also great. And as you scan through here, technically they're not doing well. They're below their 200-day moving average at this time. Put call ratio indicates in the options market, folks are buying more call options than put option. Technically, it's a sell, as you can see here, sell rating. And as you scan through here, they get a nice overall, not so great overall score. It's a 27, which is low, as you can see here. And look, from a growth grade perspective, it's grade A here. So that's a good one here. Company is growing, as you can see. And Piotrowski F-score 6, that's a great one here. I think they're doing great from that standpoint. So with that, let's jump in here and look at the numbers. Look from a numbers perspective. From a numbers perspective, look, numbers are improving. I like it when the company makes some improvements in the earnings, even though it's negative. Look at the trajectory here. They can turn positive if they keep this momentum here, maybe in a couple quarters down the line. And top line sales growth is great. Look, they're doing very well when it comes to top line sales growth, and they're not diluting too much. They're diluting slightly, but not too much. It's perfectly okay when they do the sales like this year with a nice clip. And operating margin also is improving, as you can see here. I could see it turning around in a quarter or two and turn into a positive operating margin. And it's the same story, net margin is improving. I like it. I don't like when it goes in the reverse direction, but even though it's negative, it's trying to go higher, which is always good. I think it's right now it's slightly positive, probably not yet, but it can turn positive pretty soon. And they're also paying down the debt, as you can see here. It came down. That's also great. So even though headline numbers are not great, they gave some warning. I could see a company which is slowly but surely turning around from an earnings perspective, from a margin perspective, also paying down the debt. It tells you companies fiscally responsible. They're tightening their belt and paying attention to the margin. All right, now let's look and see what's going on from an earnings history perspective. Look, this company, they missed last quarter when they announced in March. And look, they missed both on the EPS side, earnings per share side, as well as the revenue side. And this company, once in a while, it misses. As you can see here, again, one more miss on the revenue side. But look, overall, the revenue is growing nicely. That's a good one here. Look, we got revenue here. Now it's a $1 billion company, as you can see here. It came down slightly from earlier, but it's a $1 billion company. It's not a small company anymore. Still growing nicely, as you can see here. They got a lot of penetration power. They can expand in multiple countries from the current levels. All right, now let's jump in here and look at the quarterly number. Look, quarterly number perspective, look at this year. They've been doing great before this announcement. Look, it was a $23 billion company back in 2019, became $58 billion company. But look, after this drop here, now they're $25 billion company. Not too much progress here. They went all the way back to 2019 days almost. Stock price perspective, it was a $35 stock price back in $331. Now it's $15, cut in more than half, as you can see here. Sales is nice, as you can see here. Nice sales, not too bad. More than $1 billion sales, that's a good number. And there is some slow stock dilution, but not to worry. It's not too much dilution at all. Nice sales growth. I love this sales growth. They're growing their sales nicely. That's a good one here. Earnings per share is negative. I think they turned positive slightly back in 12/31/2021, but for most part, it's a money-losing company as of now. Nice cash. Look at the cash here. Nice cash. Looks like they took over more debt. That's why cash improved. But look, the debt also increased, as you can see here. But looks like they're trying to pay down the debt. Debt to equity ratio went higher, as you can see here. I think they should control it more as you go forward. Free cash flow positive company. The direction is slightly negative, as you can see here. I want this to improve more. And as you scan through here, nice gross margin. Looks like there is some pressure in the gross margin. It kind of turned on the negative side, as you can see here, 65 to 60. But I think they can control this one also as they go forward. Look, on the negative side again, net margin became negative, as you see here. It's went from 1.70 positive to negative 33.8. Not great. One good thing about this company, they're spending money on R&D, which is always great. And look, from a price to sales perspective, it's becoming cheap. Right now, price to sales ratio is around 6 after this huge big drop here. So with that, I can see a company right now it's struggling, but it's trying to improve from a numbers perspective. That's why I'm buying this drop, and I'm willing to wait for 6 months to 1 year on this stock and have a nice bounce back, and then I might look at other stocks. All right, now let's jump in here and look at technical. From a technical perspective, we got a 5-year weekly chart, as you can see on top right here. Earnings is coming around the corner in a month's time, or so, not even in couple of days. And look, stock has gone up nicely back in 2020 and 2021. but look, October 2021, from then onwards, huge big decline here. Look at the drop here. Look at that 1-day drop candle here. That's a huge 1-week candle drop here. All right, now let's see what's in the shorter term chart here. In the shorter term chart, it's a 18-month chart, as you can see here. Stock, as you can see, dropped here, and we got one more drop right here. Now stock is trying to go higher. Look, momentum perspective. Now the momentum is improving, as you can see here. RSI, after dropping way below, is trying to improve. That's good here. This is volume improving, momentum improving. And look, implied volatility, it's around 50 percentile, 48 percentile here, heavy percentile. So it's a pretty not too high, it's middle of the range here. And look, from a DMI perspective, right now it's negative, but looks like blue line wants to go higher, and red line is still high. So right now it's completely bearish, as you can see here. Too much distance between the red line and the blue line. Look, after this huge big drop here, check-in money flow or the smart money is trying to flow into the stock at these levels here. I think that's a good indication. All these big hedge funds and big funds, they're slowly buying this company after this big drop. All right, now let's look at the options market. From an options market perspective, look, the stock price is about $15 right now, as you can see here. All-time high is $83. Wow, that's a huge drop, as you can see here. And around $15 right here, $15 is right here. That's the current price, and we got look, we got nice call option here, 4,000 contracts. And even up here, look, it's a higher price. It's $19. We got nice call contracts here. Open interest is 3,800. And even up at 24, 25, there's a nice open interest. People are buying cheap call options and betting the stock will go higher. So in a nutshell here, look at the open interest here. There is a lot of open interest on the call side. On the put side, there is some open interest, but nowhere close to the call side here. That's why it's a bullish in the options world. Folks are betting the stock will go higher. All right, now let's look at the put call ratio. Look, 172,000 call contracts, 83,000 put contracts. That tells you more call contracts are traded than put contracts. That makes the put call ratio 0.4. That's a very bullish put call ratio here. That indicates there is a lot of interest in call buyers to buy the call. All right, now let's jump in here and look at the conclusion. From a conclusion perspective, look, Snap suddenly lowered its quarterly guidance. In a letter, they stated it will grow revenue from a year-over-year perspective, but will come short around 20 to 25% of its guidance range it gave just a month ago. This did not go well in the Wall Street. Stock just tanked big time. Look at that 43% drop on Tuesday. That's a huge big drop here. So at this time, I'm willing to buy and accumulate a nice position here, and I'm sure the stock will bounce. I'm willing to give it a 6 months to 1 year time frame, and then I might take some profit off the table. Look, they are making some progress here. Their community grew 18% year over year, 332 million daily active users. It also grew nicely. So companies are doing great here. They're monetizing in Europe and America and looking at other opportunities. And they began as a visual communication company, and now they're into multiple things. And one of their biggest achievements is around the AR, augmented reality. I think they want to own the augmented reality space as we go forward. And look, Snap is completely oversold here. Expect a bounce from these levels. It's already bouncing, as you can see here. It's a contrarian play. Company is not yet profitable. Fundamentals are improving. We saw earlier their earnings are trying to improve, even though it's on the negative side. It's slowly improving, and their gross margin and operating margin and net margin is improving. They got a nice Piotrowski score F, which is 6, which tells you their fundamentals are improving. So with that, I recommend buying the stock at these levels and hold it for say 6 months to 1 year, mid to long term time horizon. Alright, so with that, thank you very much. Happy investing and trading. Please subscribe.